Imagine a world with no banks, yet people still saved, loaned, and invested. 5. A world where money did not exist, but wealth still flowed like the great rivers. This world was ancient Mesopotamia, the land between the Tigris and Euphrates. A place so advanced that it quietly invented the earliest form of banking. People didn't deposit coins because coins didn't exist yet. Instead, their money was barley, silver pieces, and livestock, and they needed a safe place to store it. Enter the temples. Temples became the first banks not because they were holy, but because they were trusted. Priests were considered honest, powerful, and close to the gods, so people believed their wealth would stay safe there. Farmers brought sacks of barley to the temple. Merchants brought silver rings or ingots, and shepherds deposited sheep or goats. The temple recorded every deposit on clay tablets. Each tablet had symbols pressed into wet clay using a reed stylus. Those symbols were the world's first bank receipts. If someone deposited 10 bags of barley, the tablet proved it. If someone stored 3 silver pieces, the tablet confirmed it. The entire system relied on trust in the temple and trust in the records. Soon, temples realized something powerful. Deposited goods were just sitting there. Farmers didn't pick up their barley every day. Merchants didn't constantly withdraw silver, so temples began to loan these goods to others. They charged interest, and that interest became profit. This was the moment banking was born. Loans created opportunity. A farmer could borrow barley to plant more crops. A merchant could borrow silver to start a trade journey. A builder could borrow metal to hire workers. But nothing was free. Interest was high, sometimes 20% or more. Still, the system worked, because it allowed ordinary people to do extraordinary things. The economy of Mesopotamia began to expand. Trade increased. Crops multiplied, wealth grew, and temples gained power. Banking had taken root, and the clay tablet became the world's first financial document. But this was only the beginning. A new class of bankers was about to rise: private lenders. As Mesopotamia grew wealthier, temples could no longer meet everyone's needs. Merchants became richer. Trade routes expanded. People wanted faster loans, more flexible terms, better opportunities. This gave birth to the world's first private bankers. These bankers were individuals or families with surplus wealth. They had silver, they had grain, and they had influence. Instead of temples, people began visiting these private lenders. They offered loans with different interest rates. They negotiated terms directly with borrowers. They kept detailed clay records of every transaction. Some even had their own scribes whose only job was to write financial agreements. These agreements were strict. If someone borrowed barley and didn't repay, the lender could seize property. If a merchant borrowed silver for a trade journey and failed, his boat or goods could be taken. Some contracts even named witnesses. Every loan became a legal matter. This was the birth of enforceable financial law. Private bankers also introduced a revolutionary concept: collateral. A borrower could offer land, or animals, or even future harvests. Collateral reduced risk. It made bigger loans possible. And bigger loans led to bigger profits. Soon, private bankers competed with temples. Temples offered security. Private lenders offered speed. Temples had religious authority. Private lenders had business sense. Together, they shaped the earliest financial ecosystem. Mesopotamia began producing professional scribes who specialized in finance. School tablets discovered by archaeologists show students practicing interest calculations. They solved problems like, if you borrow 10 shekels of silver at 20% per year, how much do you repay? This was over 4,000 years ago. People were already calculating compound interest. Merchants traveling long distances also needed a safer way to move money. Carrying silver was dangerous. Bandits roamed the deserts. So lenders created clay credit notes. A merchant could deposit silver in one city, carry a tablet instead, travel safely, and withdraw his silver in another city using that tablet. This was the earliest form of a check. The system made long-distance trade possible. Mesopotamia became interconnected with Egypt, Persia, and beyond. Private banking transformed society. But it also brought problems. Debt could spiral out of control. Poor harvests could ruin farmers. High interest could destroy families. And powerful lenders sometimes abused their position, which forced kings to intervene. Debt became a huge issue in ancient Mesopotamia. Farmers borrowed barley hoping for good harvests. Merchants borrowed silver hoping for successful trade, but life was uncertain. Floods destroyed crops. War disrupted trade. Droughts ruined entire regions. When borrowers failed to repay, lenders seized property, land, livestock. Sometimes even family members became debt laborers. This created social tension. The rich got richer. The poor suffered. Revolts became frequent. Kings needed stability. So they invented something shocking. The world's first debt forgiveness laws. When a new king came to power, he often issued a decree. All unpaid debts were erased. Farmers were freed. Families got their land back. Laborers returned home. This reset the economy. It also prevented rebellion. These decrees were carved into stone, and they show that financial regulation is not a modern idea. Mesopotamia realized early that unregulated lending could destroy society. However, even with debt forgiveness, banking continued to evolve. Temples and private lenders worked together. Interest rates became standardized. Loan terms became clearer. Record-keeping improved. Clay tablets grew more detailed, showing dates, rates, collateral, and witnesses. Some tablets even specify repayment in exact quantities of barley with moisture levels noted. This level of detail shows how advanced the system was. By 2000 BCE, Mesopotamia had everything we associate with modern banking: deposits, loans, interest, collateral, contracts, credit notes. Financial regulation, record-keeping. The foundations of today's global financial system were laid in this ancient land. A world without coins created the idea of banking. People learned that trust, records, and shared rules could move wealth without moving objects. Banking was never just about money. It was about people, their dreams, their risks, their failures, and their desire to build better lives. The story of ancient Mesopotamia proves that banking is not a modern invention. It is a human invention. Born from need, shaped by trust, and carried forward by every civilization that came after. And everything we use today, from receipts to loans to credit, began with clay tablets in the cradle of civilization. If you found this story eye-opening, make sure to like, share, and subscribe for more powerful journeys into the hidden history of money, trade, and the financial world.